Have you ever heard these two insurance terms? Reinstatement of value and reinstatement of loss, and wondered whether they mean the same thing? They sound similar, but in insurance, they refer to two completely different things. One deals with how property is replaced after damage. The other deals with how your policy limit behaves after a claim. If you misunderstand them, you might think you are fully covered, only to discover later that your insurance protection has been reduced. Today on Insurance World TV, we break down the difference in the simplest way possible. Question 1. What is reinstatement of value? Let's start with reinstatement of value, also known as the Reinstatement Value Clause, abbreviated as RVC. This is a basis of settlement in property insurance that pays the cost of replacing, repairing, or rebuilding the property to a condition equal to when it was new, without deducting depreciation. This clause means that if your insured property is damaged or destroyed, the insurance company will pay the cost of rebuilding or replacing the property with a new one of the same kind and quality. And, importantly, no deduction is made for depreciation or wear and tear. In simple terms, the insurer restores you to the position you were in before the loss occurred. But there is a condition. The property must actually be repaired or rebuilt for the full reinstatement value to be paid. The purpose of RVC is to provide a new-for-old coverage, ensuring that the insured can afford to replace old assets with new ones. It ignores depreciation, allowing a claim payout based on current rebuilding or replacement costs. Usually requires that the reinstatement is actually carried out, the property is rebuilt, and often within a set time frame, e.g., 12 months. If not, the settlement reverts to the lower indemnity value, also known as the market value. Example: let's say you have a building insured for 20 million shillings. Because of age and wear, the building's depreciated market value might only be 12 million shillings. But if the building is destroyed by fire and the cost to rebuild it today is still 20 million, then under reinstatement of value, then subject to the sum insured, the insurer pays 20 million shillings to rebuild it, not 12 million. This clause exists because if insurers only paid depreciated value, many people would never be able to rebuild their property after a disaster. Question 2. What is reinstatement of loss? Now, let's look at something completely different. Reinstatement of loss, sometimes called reinstatement of sum insured. This refers to restoring the policy limit to its original amount after it has been reduced by a claim payment. This has nothing to do with replacing property. Instead, it deals with restoring your policy limit after a claim has been paid. Normally, when a claim is paid, the sum insured reduces by the amount of the claim. The purpose of this clause is to ensure a continuous protection. Without this, a large claim could exhaust the policy limit, leaving the insured unprotected for the rest of the policy period or term. It often requires payment of an additional reinstatement premium to bring the coverage back to full capacity. It is common in property and reinsurance treaties, allowing an insurer to restore their reinsurance limit after it has been exhausted. Example: suppose your policy has a sum insured of 10 million shillings. A fire occurs and the insurer pays 3 million shillings for the damage. If there is no reinstatement clause, your remaining coverage becomes 10 million minus 3 million. which means your policy now only covers 7 million shillings for the rest of the policy period. But if the policy includes reinstatement of loss, the insurer restores the sum insured back to 10 million shillings. This usually requires the insured to pay a prorated additional premium for the reinstated amount. So, what's the main difference? Reinstatement of value focuses on the value of the property. It ensures damaged property is replaced with a new equivalent, without deducting depreciation. Reinstatement of loss, on the other hand, focuses on the insurance policy limit. It restores the sum insured after a claim so that full coverage continues. Here's a simple trick to remember the difference. Reinstatement of value deals with rebuilding the property. Reinstatement of loss is applied to restore the policy limit after payment of a claim. In summary, reinstatement of value means replacing damaged property with a new one of similar type and quality without deducting depreciation. It is one of the methods through which insurance companies settle claim under a fire insurance policy. It is available for only fixed assets, and it provides the full value of replacing the damaged property or asset without calculating its depreciation. While reinstatement of loss means restoring the sum insured back to its original level after a claim, so that full coverage continues for the remainder of the policy period. Two similar sounding terms, but two very different functions in insurance. If you found this explanation helpful, don't forget to like, share, and subscribe to Insurance World TV for more simple explanations of complex insurance concepts. And in the comments, tell us, have you ever confused these two terms before?